And in the end, what we're all waiting for is this little puppy, the banana zone. The banana zone has started, and we barely started. And you freaking out, this stupid, oh my God, it's going to correct 20%. Look at Raoul's chart of liquidity. So if we get a bit of a correction here, does it make any difference? Or you're better off just going outside, touching grass, spending time with your family over Christmas, drinking a little too much Bollinger Rosé. In the end, we're here for one thing and one thing only. I'm trying to help you understand that you can your future with a banana. All you have to do is not this up.
It's been a turbulent couple of days for the cryptocurrency market. Bitcoin, the world's largest cryptocurrency by market cap, suffered a steep price correction on Thursday and Friday, losing about 13% of its price in 48 hours. The bloodbath, largely influenced by the Federal Reserve's hawkish 0.25% rate cut announcement on Wednesday, saw Bitcoin drop from an all-time high of $108,364 to $92,118 before rebounding to around $97,380 on Saturday. The correction also affected altcoins like Ethereum, which dropped by 18% from $4,032 to $3,115. XRP, which dropped by 21% from $2.6 to $1.96. And Solana, which saw a 20% decline from $225 to $177. According to data from CoinGlass, the futures market also saw $1.4 billion worth of liquidations. Fortunately, the worst seems to be over, and the crypto market is gradually recovering from the bloodbath. Amidst all the chaos and FUD, Real Vision founder and CEO Raoul published a video urging investors to ignore the crash and focus on more important issues that will undoubtedly have bigger, long-lasting effects on crypto asset prices and the bull market in 2025. One of these issues is the brewing debt ceiling tussle, which Powell says will lead to more cowbell and send crypto prices skyrocketing in the coming months. A recent X post from the renowned analyst reads, "Feels like a big fight over the debt ceiling is brewing. That means the TGA is going to be drawn down, and the reverse repo too. Quantitative tightening probably ends with the reverse repo drain. That's a very positive liquidity story for Q1. Next, we need a weaker dollar." Powell is certain that central banks, including the US Federal Reserve and the People's Bank of China, are about to embark on massive money printing exercises and other quantitative easing measures to stimulate their respective economies. This naturally means significant price increases for financial assets, but more so for cryptocurrencies, one of the few asset classes that have consistently and significantly outperformed the Fed's balance sheet in the past decade. As we bring you clips from Powell's video, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks for the support, and enjoy the video.
We know the Chinese have to start stimulating, but they can't do it with the dollar so strong because they don't want to weaken their currency too much. So they need the US in the game. Everybody knows the game. They all understand the game. It's just a matter of timing. So be patient. We've got the liquidity of the Treasury General account coming and the reverse repo and the end of QT. That's all coming. We've got potentially and hopefully a weaker dollar. That's to come. We should see rates come lower because expectations now for only 2 rate rises, rate cuts all of next year. Well, anything that produces weaker data will produce more rate cuts. So we've got a perfect storm coming up, and that's the banana zone thesis. Is this the start of the big correction, or is this a quick shakeout so you people can't hold on to your coins into year end when we get a rally? I mean, the last 2 election cycles, we finished the end of the year with a big rally. I don't see why this is different. So I'd be careful, not of the market correction. We should expect that. Part of don't this up is expect 30% corrections frequently. But please don't think about, well, I need to hedge this, close my tokens, buy them lower, blah, 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 blah. You should be prepared to accept the volatility because that's what gives you the gains. If not, you might well be chasing it into year end. By the time you chase it all get long, into, let's say, January 6th, then the market reverses. Just don't get involved in that. Your job is to hold. to own your tokens, don't trade, don't use leverage, just do nothing. Business cycle about to improve. That's fully fed. ISM versus fully fed tells you the business cycle is about to pick up massively. It won't be inflationary, but we should start to see the business cycle pick up. That's going to be good for all of us. It means we're going to make a bit more money in our businesses. We're going to start to feel a little bit more at ease. We'll be able to invest more money. We'll be able to do stuff like that. But the key thing is when the ISM picks up, it drives the ETH Bitcoin cross. The ETH Bitcoin cross has been a beautiful pattern where we've been, this is a little bit out of date, it's pulled back a tab, but it's still the same. It's like, this is a wedge pattern. Now, does it break to new all-time highs? I kind of think it might do, but even if it doesn't, it's a big range, big sloppy range. It means that ETH is at the low end of its range and it'll probably get back to the high end of its range and it remains stable in its relationship versus Bitcoin. I think that is to come, and that's driven by the business cycle driving risk-taking across assets. But when we come into that, the business cycle going up is the key trigger for altcoin season. And why is that? Again, what we need is more disposable income to invest. And what we all do is we want to go out the risk curves and make as much money as possible in the shortest period of time. That is the world we live in because we are so we're so because of how high housing prices are, the cost of goods and food, how restaurants. I was in New York City. It was $330 on my own for dinner at a fancy-ish French restaurant, not like a 3-star Michelin. It's insane out there. So we have to make a lot of money. I get it. I get that things are a lot more expensive for many of us or for all of us. And the only way of getting ahead is speculating. I get it. So I want to help you speculate intelligently. And altcoin season is there. That doesn't mean go way out the risk curve. But here's the total market cap of crypto, excluding the top 10. So this is really alts. It does this every time. It has this consolidation wedge pattern, breakout higher. We've just started breaking out. So have patience, hold on. And, it'll also get rid of many of our sins, the stupid shit you've got in your portfolio. I think it will help with that too.
Pal anticipates a significant altcoin season as we go deeper into the banana zone in 2025, largely influenced by central banks turning on their money printers to prop up their respective economies. Pal's everything code thesis posits that asset prices are primarily influenced by central bank monetary policies and debt levels rather than traditional company fundamentals or economic growth. He argues that high global government debt levels necessitate central banks to engage in quantitative easing to manage interest payments, creating a cycle where more QE is required every 3 to 4 years as debt rolls over. This process leads to the debasement of fiat currency, causing asset prices to rise, with tech stocks and cryptocurrencies typically outperforming in this environment due to their growth potential offsetting the effects of QE. Additionally, Pal has indicated that during the crypto summer, Ethereum is expected to outperform Bitcoin, with Solana accelerating its outperformance of both Bitcoin and Ethereum. He also suggests that 3 or 4 cryptocurrencies are set to lead the altcoin season, with one particular cryptocurrency emerging as the big new entrant, similar to Solana's emergence during the previous cycle. According to his previous videos and tweets, he has chosen Sui as the big new entrant for this cycle, and he believes the cryptocurrency will outperform Solana and possibly other top cryptocurrencies. Most importantly, Pal urges investors to be calm and expect the declines as well as the price increases. In his view, this cycle will be a blow-off top cycle like the 2016 and 2017 bull market, not a stunted one like the previous cycle. Here are more clips from his video.
2021 is not the roadmap. What happened in 2021, because of the violence of the downside in 2020, the upside was equally violent in the business cycle. And the ISM peaked in March of 2021. Right now, we're still below 50. There is no chance the business cycle peaks. And none of our indicators suggest anything that this crypto market is anywhere near overbought. So we are in this perfect position where we just keep following this roadmap. This is all I need. This is all anybody needs. You don't need any of the rest of the charts. You don't even need to log on to Twitter. You don't need to do anything, but just use this. Use this one chart of Bitcoin in its log regression channel and suggests it probably goes to 2 standard deviations overbought. What is that? Well, that's kind of north of 500,000. So maybe it goes to 1 standard deviation. That's about 300,000. That looks pretty reasonable to me. That's what every NASDAQ stock has done since 2012. So it's not like some special magic property of Bitcoin. No, it's Metcalfe's law. Amazon has done this. Microsoft has done this. Apple has done this. Tesla has done this. Meta has done this. It's all the same. So I'm not asking a lot here. I'm just saying it just continued to be adopted as a technology and everything continues to go. And in the end, what we're all waiting for is this little puppy, the banana zone. The banana zone has started and we barely started. And you freaking out, this stupid, oh my God, it's going to correct 20%. Look at Raoul's chart of liquidity. That's this, if you can see it, in 2017. That's this in 2021. In 2013, we didn't even get that. We got sideways. So if we get a bit of a correction here, doesn't make any difference. Or you're better off just going outside, touching grass, spending time with your family over Christmas, drinking a little too much Bollinger Rosé, learning how to toast your own snacks. Yeah, everything else is just. In the end, we're here for one thing and one thing only. I'm trying to help you understand that you can unlock your future with a banana. All you have to do is not this up.
Pal has a few simple rules for navigating the banana zone. His topmost and most popular rules are no FOMO, no leverage, fill your main bags with top cryptocurrencies, avoid over-diversification, self-custody your coins, and limit your degen bags to only about 10% of your portfolio. According to the former Goldman Sachs executive, taking these precautions and zooming out when things get murky will help you enjoy the full opportunity the cryptocurrency industry presents. Pal believes the cryptocurrency market is on track to grow from just over $3 trillion today to about $12 to $15 trillion next year and $50 to $100 trillion by 2030. It's a monster lifetime opportunity for all investors across the globe. Do you agree with this prediction? Please share your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.